I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophy.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Get your fixed inks. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Headed for a 5th consecutive week of losses. 30 minutes to go until the start of cash equity trading. Right now. Coming up, strikes continue across the Middle East as President Trump gives Iran another 10 days to make a deal or face more attacks. The Nasdaq may be nearing a correction as a sell-off in memory chip stocks exposes a growing divide in the AI trade, and cyber stocks selling off this morning after an Anthropic report. And amid a wave of redemptions and private credit, Oaktree says it can meet every withdrawal request. Let's get a check on markets. It was a pretty ugly day yesterday. 1.7% was the decline in the S&P, the worst day since the war broke out. We fall again today, so now we're on track for a decline this week. It would be the longest losing streak since 2022. Also underpinning the pain are these two assets here. We've moved up by 0.5 percentage points on 10-year yields since the war started because of what we're seeing in oil. So we are just under 4.5 on your 10-year yield. Brent crude trades at 110. That is lower on the week, but still a painful level of up 2.5% today. Now, I mentioned tech. It's down 5.5% since the war broke out, but if you take it from its peak, it is down 9.7%. So if this market opens up where futures are indicating and it's able to close there, we will be in a correction for tech. It's getting hit from all angles this morning. It's chip makers, it's software, it's cyber, and it's the big cap tech too. Back to our top story, though. President Trump pushing back his deadline for Iran to agree to reopen the Strait of Hormuz or face attacks on its power infrastructure. Bloomberg's Anne-Marie Hordern asked the president about Iran charging ships to pass through Hormuz.
Should Iran be able to charge a toll for the Strait of Hormuz? They're charging some vessels to go through.
Oh, yeah. Well, should they be able to? I mean, they shouldn't be able to, but they're doing it a little bit. I don't know. Look, their capability is a lot less than it was 2 weeks ago. And with every week and every day, frankly, it gets less and less. All I can tell you is they're begging to make a deal. So let's see what happens.
Joining us now is Wayne Sanders, Bloomberg Intelligence senior defense analyst and retired Army colonel. Wayne, the president seemingly taking some of the near term being this weekend risk off the table. The 5-day deadline gets pushed out an additional 10 days. What can actually be done in those 10 days?
Well, I think one of the first things you're going to see, right, is the USS Tripoli and the Marine Expeditionary Unit is going to arrive. So what it does is it opens up options that President Trump has. You know, he likes elements of surprise. A lot of these pieces have been choreographed up until this point, but that extension out to April 6th does provide President Trump with a little bit of, I don't want to call it breathing room, but more in terms of military options, in terms of what he's trying to be able to do. The problem is it's still very limited in terms of these ground troops that are on their way, right? Between the Marine Expeditionary Units as well as the 82nd Airborne Division, you're still talking about probably about 10,000. Even if you put 10,000 more, that's still a fraction compared to Operation Iraqi Freedom or to Desert Storm.
So would that be not in line then with the idea to make one final huge surge to kind of end the war? Would the amount of troops that are coming there not be able to achieve that? And if so, what might even be the thinking of having them there?
Well, I mean, President Trump, from a leverage perspective, anything that requires boots on the ground is going to be something that he can use and say, hey, I am willing to do this, especially the amount that they have. It could still be surgical and limited to the Straits of Hormuz. It could be the islands around it. It could be Karg Island, specifically being able to take it. It could be a scenario where they're trying to put boots on the ground around the coastline so that they can actually try to eliminate as much as possible and mitigate the asymmetric threats of shoulder-fired missiles from Houthis or others around the straits as well. So there are other options that are out there in terms of a limited cordon engagement, if you will, specifically inside of Iran. But everything that you do there obviously increases the amount of geopolitical risk to putting boots on the ground on the mainland.
And that risk seeping through markets. Wayne, thank you so much. That's retired Army Colonel Wayne Sanders of Bloomberg Intelligence. And in just a few moments, BCA strategist Marco Papich maps out 4 possible outcomes for Iran and the Strait of Hormuz. We'll catch up with him very shortly. So uncertainty over the war in Iran is continuing to drag down stocks. Something else is also happening in the background. NASDAQ 100 closing on the verge of a correction yesterday, down 9.7% from its high. Let's get more with Bloomberg Tech co-host Ed Ludlow. Ed, it's like those AI fears haven't gone away. For one, you have a jumpy markets to start the week on that Google news about more compressed memory needs. And then you have this report this morning about some sort of Anthropic release that's pressuring cyber stocks. We're still concerned and still a jumpy market at this point.
Yeah, all of the above. I mean, the thing with the NASDAQ 100, or if you just take technology stocks in general, is that there has been a macro-driven drawdown, right? And that much like in the broader market, there's been a rotation out of growth, and that clearly impacts that index, at least at the NASDAQ 100 level. But what people are looking at is not necessarily the direct linear effects of what's happening with the war in Iran. We've assessed the supply chain risk, for example, with helium and sulfur on the chip manufacturing side. But it's simply the consistent themes: free cash flows, capital expenditure spending, and AI spending holding up. And we can get into the nitty-gritty of why memory, which, by the way, now the story's completely changed. It's not memory, it's storage as a result of turbo quant. But those themes have been completely consistent. And nothing has really changed in terms of catalysts in either direction in the last 10 days or so.
Ed, speaking of Anthropic, maybe they're in this kind of stage of putting all these updates and releases out there, because it seems like they'll be IPOing. I know you and I were talking about a SpaceX IPO. It seems like Anthropic might be trying to join in the fund this year.
Yeah. Our reporting is that the end of this year is the target, and there is also like a starter gun type situation where either SpaceX is or is not going to file its prospectus confidentially in the coming week. They may go first. That June is still our latest reporting on SpaceX. Is Anthropic waiting for SpaceX? It's very hard to know that. There are obviously bankers on the top line common between them, all trying to pull this off, and OpenAI somewhere in the middle. But really, the driver in markets as it relates to Anthropic today is that Fortune report on an unknown model that was accidentally released in a blog. But yeah, that's the latest reporting.
Well, what did you make of that report, Ed, and the fact that it's sending CrowdStrike, Palo Alto, all of them down so hard?
Yeah. It's not straightforward. Basically, Fortune did a report about a model that's unreleased because there was a blog draft about it in an unsecured location that was found. And then Anthropic confirmed the model's existence via a spokesperson. The reason those cyber stocks are down is that this particular model, this next generation model, which is not yet released, Anthropic, in its own internal detailing, is talking about its competence on the offense. In other words, the capabilities, the cybersecurity capabilities of this model to go out and be offensive is greater than those cyber names that you just mentioned's ability to provide defense. And they are acknowledging an internal concern about that, which is a fascinating state of affairs. That in the future, that is one consideration with AI. It is so good at cyber as a threat that you need to get a hold over it.
Ed, very much so looking forward to today's show. Bloomberg Tech's Ed Ludlow, catch him at 11 a.m., so in just under 2 hours' time. Elsewhere, Oaktree says that it will meet all redemption requests for a $7.7 billion private credit fund aimed at retail investors. The requests total 8.5% of net assets. Usually the gates are put up at 5%. The move makes Oaktree among a handful of firms that's not putting a cap on withdrawals. Bloomberg credit reporter Dana Al-Baltaji joins me for more. Dana, I mean, how to view this? Because I'm always curious when a fund says, we're going to give you everything back that you've asked for, because aren't they the ones arguing that they need to save you from yourself, that gates are important because at the end of the day, these aren't liquid assets?
On the head, Danny. That's exactly what we're seeing here. We're seeing some firms that are basically saying, if you want your money back, great, we will honor all of the redemption requests. And you've got other firms that basically say, look, this is how the fund works, and we just need to make sure that it works properly. See how it plays out.
It does feel like we're in this world where the whole golden age of private credit, we probably went typing up how wonderful of an asset class it is. And then maybe we course correct and we go too far in saying the doom and gloom. But Dana, I do wonder when you think of lasting impacts from this moment where you're maybe getting defaults starting to creep up, redemptions are going up. What have you been talking to people about? What have they been saying and kind of the scars it might leave on this industry?
To be a part of the maturation process of the private credit market, to be honest. I mean, it hasn't really gone through a cycle like this before. And for any industry, it is good to go through a cycle like this just to know what not to do next time. I mean, even Oaktree says that there seems to be some sort of a correction in markets. So, yeah, I mean, it would be interesting to know how things go forward. But, I mean, just to let you know of the changes in tone, I mean, you've got Oaktree with this statement today, but earlier this week, we had Larry Fink basically telling the BBC that the information isn't exactly deep in the perspective to figure this out for themselves, or if in the future the funds will take more time to really explain what the risks are.
Yeah, I mean, I was talking to the CIO of the Dell family office, and she was basically like, my old retired parents who need liquidity because they are retired, they need to be able to pull that money out quickly, are getting pitched private credit from their wealth advisor, and it makes no sense for them. So it feels like somewhere maybe there is a disconnect. Dana, thank you so much for joining us, Dana Al-Baltaji. And in the next hour, Morgan Stanley's Vishy Tirupatoor will be joining us for more on private credit risk. He and the team said that defaults, their base case is 8% for private credit. Let's get a check on your markets. 20 minutes to go until your trading day. We're down 0.6% for the S&P. NASDAQ underperforms yet again. A really ugly day yesterday for tech. It's like all of the worst things come together. It's a general sell-off because of the concerns about war. AI concerns back in the forefront and fueling stocks selling off. You have oil being a huge pressure too. And then there are tariff concerns as well with China maybe hitting back. You're looking at Brent crude now at $111.40 a barrel, 10-year yields at 447.99. Coming up, de-escalation, regime collapse, or U.S. intervention. Strategist Marco Papich maps out 4 possible outcomes for Iran. You're watching Bloomberg Open Interest.
Thousands of American Marines are heading to the Middle East.
Greece will not participate.
There's a very good chance we're going to end up in a deal.
He's looking at putting boots on the ground.
This is going to be a short-term excursion.
Trust Bloomberg for on-the-ground coverage.
Things are not de-intensifying.
A lot of fear here in Europe. Ukraine is being left out in the cold.
Up-to-the-minute reporting.
The Fujera report has been hit.
Missiles have struck the U.S. Embassy.
And the analysis you need.
The United States military has shown its might. Now it's time to please calm down.
Nobody covers geopolitics like Bloomberg.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah.
I mean, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. I'm not here to say what I would and wouldn't do in the future. But the theatrical experience is one that means a great deal to me. It means a great deal to us. Mm-hmm. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. But that's where I'm at today.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Risks from the Iran war are rising, and so are the economic consequences. Economists now warn inflation could climb back above 3%, putting renewed pressure on U.S. growth. At the same time, BCA strategist Marco Papich says that the clock is ticking on the global economy. He lays out 4 possible outcomes for Iran, including what he calls a new kinetic equilibrium, where the conflict continues but oil keeps flowing. Marco joins us now alongside Bloomberg economist Stuart Paul for the all-star of all-star roundtables on geopolitics and this economy. Marco, let me just start with you. What are the 4 scenarios that you're looking at?
Well, first of all, they don't combine to 100% because some can happen in conjunction, like regime change. I still assign 10% to that. The problem with it is it can go good, it can go bad. You can get a more compliant regime, you can get a far less compliant regime. Then the second, of course, ground incursion, the re-escalation. I think if President Trump chooses the ground incursion option, the market is going to suffer. Then de-escalation, that's an obvious one, some sort of a deal. The one that I think is most interesting, and the one that I assign 50% probability, is a new kinetic equilibrium, where basically the war continues for the next 6 months. No, actually even 6 years, perhaps. However, an equilibrium emerges where energy gets to transit through the Strait of Hormuz despite the hostilities. So you never actually get a moment where there's a ceasefire, where the market breathes a sigh of relief necessarily. There's no taco day. But eventually we just realize, vessels are transiting Strait of Hormuz. Interesting.
Stuart, let me bring you into the conversation. How are you mapping out the different scenarios and the extremities of the risk to the economy in them?
Well, in the U.S. context, the thing that's going to matter most and where the rubber really hits the road is with gasoline prices and the consumer outlook. Where gasoline prices are now, it ends up equating to about a $12 billion a month drain on consumers' pocketbooks. That ends up going to gasoline retailers. It ends up going upstream to refiners, producers, into the energy infrastructure. But all of that money needs to be taken out of real spending elsewhere. And so we should be marking down our growth forecast by almost a percentage point, definitely our real household spending growth forecast by about a percentage point. In the rest of the world, among oil importers, it really does depend on what scenario we end up seeing. If we do see energy transiting through the Strait of Hormuz,
Marco's scenario.
Marco's scenario, where we have this new kinetic equilibrium, we end up having less of a drag in places like India and China. And Marco, that's why I'm really particularly interested in this scenario. I'm interested sort of who holds the cards here. Is it China and India who are going to pressure Iran into negotiating some sort of a deal with the United States so the regime can stay in place, those barrels can keep moving to China and Iran? Or does Iran want this to continue, but they sort of need revenue? Who holds the cards here in this negotiation?
I think everybody holds a little bit of cards, so this isn't one of those I hold all the cards, but it's a great question, Stu. And what you point out, what you're double clicking on by asking that question is what can China do to change Iran's behavior? And everyone's sort of focusing on the wrong things. I'll tell you one data point that I'm sure you're going to chart later after this conversation, and it's that Iran has a trade deficit with China. How's that possible? They send so many barrels of oil to China. Well, it's because they receive everything that makes them a modern industrial economy. What that means is that those drones flying into vessels, they've got Chinese components. And no, not because China's evil. American drones have Chinese components in them. Let's be real. Iran may be able to assemble a drone. It doesn't have semiconductor fabs. So absolutely, China has massive leverage on Iran without Chinese trade. Iran cannot function as a modern economy or conduct combat operations. So I do think that at some point you can get Iran to accept certain limits to kinetic action.
But Marco, why not then just have Iran only open up for Chinese vessels? Why have some sort of situation in your kinetic equilibrium where more oil can go through? Why wouldn't Iran just make the decision, okay, we're just going to distinguish, only let China go through? Maybe oil comes down a little bit, but that still seems like it settles at a much higher premium.
Yes, absolutely. I mean, it would have to set at a higher premium, but I also think that there's other ways to pressure Iran. Obviously, U.S. can attack. There's a tacit agreement between U.S., Iran, and possibly Israel on what is appropriate to attack. By the way, there's a historical precedent to this that I think your viewers should really study up on. Iran-Iraq war was a vicious war. And Iraq was actually a proxy of the United States at the time, financed by the GCC, the Saudis, UAE. And yet that war, despite its brutality, over 1 million people dead, I mean, much worse than what's going on today, it settled into this appropriate kinetic path where there were certain things that were appropriate to strike and then others that weren't.
One thing that I've been wondering a little bit about, Marco, is where this conflict fits into any sort of larger multipolar or bipolar geopolitical rivalry, let's say between the U.S. and China. If there's this relationship between Iran and China where China needs Iranian crude and Iran needs imports from China, particularly to create drones or any other sort of infrastructure, why would the U.S. want any sort of de-escalation if it lifts its geopolitical rival China and allows revenue to flow back into Iran?
Well, I think your question reflects this real struggle between a bipolar outlook and a multipolar. In a bipolar world, you're right. It's a zero-sum game between the two superpowers. But in a multipolar world, actually, Stu, you have these conflicts where the two rivals find themselves on the same page. And in this particular case, I would argue that the US and China are on the same page. Let's imagine a scenario where there is no de-escalation. There is no kinetic equilibrium. It's that 35% where the market's down another 30%, right? Re-escalation. I can see a world where Chinese vessels are shoulder to shoulder with American in 6 months' time, trying to pry open the Strait of Hormuz.
And you know why that's interesting, Marco, is because this was an administration that has gone back and forth as to whether they really want this, but that at some point wanted NATO vessels to be the one alongside American ships. What difference does it make in the division of this global world to have American allies, which have already been, let's be honest, abused by tariffs, this time around being much more hesitant to help out the United States?
That's a multipolar world, right? It's every pole for itself. It's the famous Palmerston quote, "There are no friends, there are no enemies, there's just interests."
As we look ahead to U.S. discussions with China in the coming weeks, I'm wondering how that, each pole for themselves, this multipolar world, ends up working out. Of course, we're seeing some rhetoric out of China this morning to ramp up any retaliatory tariffs against the U.S. But as there's this larger negotiation about the relationship between the U.S. and China, do you think that this is going to be basically the entire talking point? Reducing, de-escalating on trade so that the two poles, or two of the poles in a multipolar world, can focus its attention on Iran and opening up the strait?
Well, I think this is where, you could probably criticize the Trump administration a little bit for refocusing America to the Middle East. So how much slack does the U.S. have to now also wage another front war with China on trade? To me, it looked like President Trump was, lining up for some sort of detente with China anyways. And I think that the current situation in the Middle East probably reinforces that necessity. China needs to be a willing partner to pressure Iran. Now, and they're going to extract something for that service to the United States.
So, Marco, there's a lot of wild cards, a lot of variability in it. And one thing that also sticks out to me, you said the other day, if this doesn't get resolved, we're looking at a pandemic-style shutdown of the global economy. So much is at stake. What are you advising clients to do right now? Are markets appropriately pricing in this risk?
No, they're not. And the lower the markets go, and the futures are flashing on the side of the screen as I'm saying that, the lower the markets go, the better for the de-escalatory scenarios. So if you are sitting there wanting to buy back into risk-on trades, particularly all the rest of the world stuff that was outperforming US, that looked really juicy over the past 12 months, if you want to nibble at that, you want market to go down hard in the near term. It's necessary. It's important. The 10-year yield has to go higher. Stocks have to go lower. That will put pressure on President Trump to avoid re-escalating from this position. So the ground troops, and Colonel Sanders that came on before me, he really articulated very objectively and straight the fact that the troops that are being amassed, and I can't even use the word amass because it's not appropriate, the troops that are being assembled are just nowhere near the levels we've had in Gulf War I, Gulf War II. So what's the point? What's the plan here? Why? Take some island in the middle of the Strait of Hormuz that doesn't really give America any strategic advantage, given that it's already got the air bases and the ports in the region. I think that President Trump really needs to think about what is the risk reward for any ground action, given the amount of troops he has already positioned in the region.
So a lot of your outlook for the global conflict comes from what is going on in global markets. My interest is what's going on based on your expectation of a 50% probability for this kinetic equilibrium, and then what that means for markets. If you end up having a prolonged kinetic warfare, but a reopening of the strait, what's your favored trade in that case?
I think in that case, everything that's happened over the last 4 weeks will reverse, and we'll go back to the short dollar, long rest of the world, equilibrium that we had landed on as global investors. Now, what's interesting about that?
I think we might have just lost Marco, which is so unfortunate because I feel like he was just about to make a great point, but great points were already made. Marco Papic, we're going to have to end it there. We're just about out of time anyway. We're going to get you back, Marco Papic of BCA. Stuart, I just want to get quickly your take in listening to Marco. These two very different outcomes where there's escalation, but one where maybe oil can flow through. How are you thinking about those assumptions, especially when it comes to what interest rates will look like and that sort of weight on the economy?
I think there's certainly a global interest in reopening the strait. I think that Marco's absolutely right about that. Whether kinetic warfare continues in the background, I think that we know that Iran has the capacity and the taste for doing that. We've seen that they're able to engage in a prolonged conflict in the Iran-Iraq war. What does that end up meaning for crude prices? Of course, fading of Brent, say, back down to 80. We end up having a little bit of an inching back in of headline inflation. We're expecting March headline CPI of nearly 3.5%. That'll start to come back in, and that reopens the door for rate cuts, but probably in the second half of this year.
Yeah, hopefully we don't get that worst case scenario from the OECD of 4.2% for the U.S. Stuart, that was amazing. Please come back again soon. Alongside Marco, that is Stuart Paul. Coming up, Sarah Hunt of Alpine Woods joins the show as stocks head for their longest losing streak since 2022.
tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the US, or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Welcome to Bloomberg This Weekend. I'm David Gray.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Just seconds away until the start of your trading day. You are watching Bloomberg Open Interest. I'm Danny Berger. Matt has left me alone until Tuesday. He'll be back. A tough week. We were headed for a weekly gain. That reverses yesterday. Now headed for the 5th weekly loss since 2022. S&P down 0.5%. NASDAQ underperformed. Some drama going on with tech too. And as yields inch towards 4.5%, the Russell 2000 also down 0.6%. At the opening bell, we have a SPAC. SPACs are back. We might not be at highs for markets. It might not be bubbly or frothy, but, you know, maybe it's a sign that we're still getting SPACs. I believe they are just listing now the blank check company, Kensington, Kensington. And then finally, Xanadu. This is a quantum computing company. I swear, I did not realize how many small quantum computing companies are out there. This one happens to be a Canadian one, but I feel like it's like at least once a week we get one of these at the opening bell. So there you have it. I'm going to look at a different part of tech here, though, at the opening bell. Look at what these cybersecurity stocks are doing. CrowdStrike, Palo Alto, Cloudflare, Zscaler, all of them down at least 3%, and as bad as 6.5% in the case of Palo Alto. It's a concern coming from a Fortune report that said Anthropic is testing a new AI model that poses significant cybersecurity risks. We thought cybersecurity was one of the safer parts of software just because of how integrated it needs to be. Maybe it's not with all the AI. Carnival also reporting estimates results that beat expectations. Shares are still down 3%. CEO Josh Weinstein says the company delivered a strong start to the year, driven by healthy fundamentals and solid execution across the business. But maybe the greater concern is what's happening in oil markets. Let's go back over the desk, because joining us now and sitting here patiently waiting is Sarah Hunt, Chief Market Strategist at Alpine Saxon Woods. Sarah, great to see you this morning. Thanks for joining. Just staying on the idea of Carnival earnings, because it's still down, and there's been so much sour sentiment towards travel stocks because of fuel, because of consumer appetite. How are you looking at the sector as the war drags on? Is this a place that you can play in this market?
I think that ultimately we've seen when you get shocks like this, the stocks have a bad reaction, and if things resolve themselves, but also in general, they will tend to bounce back. The question is it too early to start that? And I don't know that we know the answer yet. It's certainly a good time to be looking at these and choosing what you would like to be in when you sort of feel like there's some sort of stabilization. But for the most part, you want to look at balance sheets, you want to look at cash flow and understand, can they get through some sort of period of softness? But generally speaking, the
thing that I'm kind of struggling with is you want to look for a safe balance sheet and where cash is to protect you and safety. And that's brought up with a lot of people saying maybe big tech is the place for safety. But I'm also looking at the NASDAQ this morning, down 0.7%, which means it's now in a correction, down 10% from its October highs. What do you make of this? Is this not currently a nice little safe, cozy place to hide out in the midst of geopolitical strife?
So this is definitely a time frame issue, right? Because we came into this year on valuations that were pretty high, looking for a year where you thought you were going to see expanded capex and things were going to move along and the economy was okay and labor markets were okay. And now we have a number of exogenous shocks, including what's going on with Iran. Interest rates have gone higher. There's a number of things going on. Private credit is having some problems. There are a number of things that are going on. So from a longer term perspective, are those good places to be? Yes, they are. Can they have some near-term pain? Absolutely. Because you see that the growth issues are being there's a lot of concern about that, and then interest rates add to that. So I think in the near term, they're a little bit stuck, but longer term, not so much.
By the way, it does feel like whack-a-mole. Private credit, concerns of geopolitics, what AI is doing in general tech. I mean, on the AI point, I mentioned this before, that Fortune had out some story about Anthropic releasing a new model that seemingly is putting pressure on cybersecurity stocks. I thought we were past this, Sarah, that we were past the world that like one tiny announcement comes out and it crushes stocks. What do you make of the fact that we're still so sensitive to AI disruption for software?
I think that the general level of uncertainty and all of the things that are going on makes everybody especially sensitive. I think absent some of the other things that maybe people would look through that. But with AI, that revolving threat has been going after different segments of software, different segments of other things, and people get really worried about it. And then you already have reasons, I think, to the extent that sometimes when there looks like there's a relief to the situation, the market wants to go higher, tells you people want to buy. The fact that they're so sensitive to things also tells you that people are worried, and they're worried about valuation. So it's easy to see sectors get moved around, which is, again, a time frame issue. Because from a longer perspective, I don't think it's much of a problem. On a near-term perspective, it obviously has some sensitivity.
And it's a good point, because we had also been hearing in terms of the time frame issue that people came in before the war broke out, that they were short some of these tech stocks. War breaks out, they get low to the ground, so they unwind a lot of those shorts and they rally. Maybe that's over and they can add back. How much are you looking at general market positioning as driving where we are right now versus fundamentals?
Well, I think that this was one of the big issues about coming into this year. We expected some volatility. We didn't expect this much volatility, and I don't think anybody had this on their bingo card, what was going to happen. But I think that you had people positioned for, again, some pretty benign outcomes, and I think right now we're looking at the potential for some outcomes that are less benign than we started the year with. So I think that gives you some problems. And as people work through those, then you start to see some room and some possibility. You also don't want to get to the point where everything is so short, you could end up with a short squeeze. It can happen in a lot of different sectors. So I think, you want to look at positioning because it gives you an idea of where people are starting and how much room there is.
There is also a continued sell-off, and it's actually a curve steepening today. The 10-year yield is up 5 basis points at 446. It's easily up 0.5% since the war broke out. As we creep closer to 4.5%, do certain trades start to become under pressure? Does a 10-year yield at 4.5% break anything?
I think in the same reason that does oil at any X price break anything, the question is, are we staying at these levels or have we run to these levels because of what's going on right now? And I don't know what the answer is. If we stay at these levels, it could be a problem for all of the things we've talked about. Certainly the small cap trade that was having trouble in the beginning of the year as people were starting to worry about what was going to happen. I think that there is always a reason to think that there could be problems. The question really is how long does it stay there? And I don't think we know the answer to that yet. But the longer this goes on, the more it feels sustained.
Do we have an answer to the length at which it becomes a problem? Is this like it needs to last a year? Is it months? Because we've seen that corporate America is incredibly resilient. I mean, Barclays was just on surveillance raising their price target, saying that the fundamentals and the bottom up look really strong. So how well equipped is corporate America to weather through any sort of sustained energy price increases?
prices?
I think the combination of higher energy prices and higher interest rates is much harder. But I also think that if you got some sort of a resolution where at least you started to see things transit through the strait, right? Because I don't know what else the resolution is going to be, but you have to see energy start to move for those prices to come down. If that comes down and it takes interest rates with it, then I think that you don't really have that much of a problem. And corporate America is enormously resilient and has managed to, I mean, I go back to when they started raising interest rates to begin with off of zero. And everyone said, well, we're going to crush the economy because we've gone from zero to where we are. I think that there is a lot of resiliency there. I think there was some dry powder there. I think the question is the longer it goes on, the more tenuous that becomes.
Sarah, just before I let you go, I would love to know how you're thinking about general portfolio construction at this moment. 60-40 is on track for its worst run since 2022. Gold's it's a momentum asset, I guess, now. It's not really providing any sort of hedge. Clearly, bonds aren't either. How are you thinking about the construction and what actually makes for a diversified, well-hedged portfolio in this type of scenario?
So, you know, when you get a couple of years in a row where everything is ridden by tech, and tech is the one that's driving all of the performance, it's much harder to look at the portfolio and say, we really like where we are. But we have been dividend people. We have been capital return people. We have been looking for companies that can grow their cash flow, grow their earnings, and do the kind of things year in and year out under a variety of circumstances. I think that's a time for that sort of construction to shine that is across industries. It's not only certain sectors. You know that certain sectors are going to get hurt by this, but you want to be, again, this is a long-term positioning question. This isn't what do I need for 6 months? Because what you need for 6 months, some of that should have been liquid already. Gold had a huge run, and so it looked like it was going off to the moon. The fact that it's acting the way it's acting right now tells you that there was probably a lot of speculative fervor in there, and so some of that is coming off. But longer term, does it still have a position? And you know, we like the miners as opposed to simply gold exposure because they will do well from that, and some of them pay dividends as well. So there's a lot of ways to express an opinion.
It sounds like some good opportunities in that too then.
Absolutely. If you take a look at some of the mining stocks, they've come off quite a bit. I mean, Newmont has come down from 120s to sub 100. There's a lot of places where if you think that some sort of price above the 2,000 or 3,000 level is going to be positive for these stocks, you've got some room there. I think energy's become reinvestable again because for a while it wasn't investable. Everybody thought that we were getting away from hydrocarbons. I think this is an example of that, how that is not the case. But it means that maybe you have some in there, and again, this is a dividend-paying group, this is a cash flow-generating group. So I think that there's some room for people to look at sectors that have been sort of left by the wayside here, but longer term, you know, we've been doing that anyway, so we think this is a good year for that.
Sarah, thank you so much for joining. Please enjoy the rest of your Friday and your weekend. Sarah Hunt of Alpine Saxon Woods. Let's get a check on your equity market about 10 minutes into your trading day, down 0.6% for the NASDAQ. If we close at these levels, we are going to hit a correction down 10%. I just want to point out Apple at the top of the stack in terms of points added. It's only up 0.4%. But Mark Gurman had this really good story that Apple plans to unleash its Siri with AI, and basically you can choose the LLM. So they're not going to be spending a bunch of money on OpenAI or Anthropic. Maybe Apple is going to win the AI race by not spending any money. Maybe that was the genius move all along. Elsewhere, we are seeing a rebound in some of these chip stocks that have gotten hit. The memory stocks like SanDisk, Lam Research on that report that we saw earlier in the week about Google's release, Exxon doing well, energy stocks doing well. That's not a surprise. In the down ledger, look at these big cap tech having a really tough day. Microsoft, Amazon, Alphabet, all of them down at least 1.5%. Tesla, it is the Mag 7. A who's who minus Apple of selling off and selling off hard. Just want to point out, you can see Palo Alto at the bottom there. That was an issue that we've been talking about with a Fortune report about a new release from Anthropic. Looking at the sectors, staples are having a really good day. Michael Hartnett from Bank of America represent staples as a place hide out when we get more government stimulus to try to avoid a recession. Energy and utilities do well. Energy up with the price of oil, and consumer discretionary with Carnival falling at the bottom of the pile. Coming up, we're going to talk about that. Carnival issuing weaker full-year guidance as fuel costs rise. We're going to take a deep dive next. This is Bloomberg Open Interest.
Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Technology is embedded in every aspect of our lives
and laying the foundation for the future.
From finance to defense, AI to entertainment,
and from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
The losses stack up for this week. We are now down for a 5th consecutive week, the longest losing streak since 2022, as Brent crude inches higher by 2.5%, and 10-year yields sit at just under 445. Now time for some top calls. Let's look at the analyst action this morning. First up, JP Morgan. They upgrade the power plant builder Argan after reporting a strong fourth quarter. The firm sees several potential catalysts on the horizon, up a whopping 22.5%. Next up, Evercore, they raise its rating on the trucking company Knight-Swift Transportation, citing its valuation and saying it will benefit from an upturn in the trucking business, but shares fall 0.5%. Finally, Bank of America, they upgrade TripAdvisor to a buy, saying pressure from the activist investor Starboard is increasing and could unlock more value, up 3.2%. By the way, I spoke with Jeff Smith of Starboard about his plans for TripAdvisor on the Bloomberg Deal Show. You can find that conversation on the Bloomberg terminal or on Bloomberg.com. Let's get a check-in on Carnival shares because they are down only 0.8%. They were worse before. They're bouncing around. They reported first quarter results. Its full year adjusted EPS missed estimates. Bloomberg consumer reporter Red Brown joins me now for more on the results. Red, you've been looking through these. What do you make of what we had to hear from Carnival?
Yeah, well, I think the thing is kind of jumping off the page, just across the board, they missed with their outlook. They're still saying that this demand is going to be really strong. They're saying kind of record levels of demand. This is something we've been hearing from cruise companies for a few years now. But I think we're starting to see maybe some of these costs kind of creep in, especially the fuel costs. One thing to keep in mind with Carnival, in comparison to its rivals, Royal and Norwegian, is Carnival actually doesn't hedge its fuel prices. So we are going to see like a little bit of that impact from the recent change in fuel prices impact them a little bit. They said in the second quarter they're expecting to see fuel costs around $610 million. Analysts were expecting $540 million. So yeah, we're definitely seeing that impact kind of hitting the bottom line right away for Carnival.
Yeah, because I was just looking at what's in their assumptions for their guidance for the price of oil. So $90 for the remainder of April and May, $85 average for the third quarter, $80 for the fourth quarter. presumably that is an assumption to make. If the Strait of Hormuz remains closed, maybe we stay more towards the 90 region. What does it mean for a company like Carnival? Do they have the capacity to raise ticket prices if all of a sudden they're going to see higher fuel costs?
Yeah, no, that's a great point. And they can, because the demand is so strong. I think, if I'm remembering correctly, they said they have 85% of their trips already booked for 2026. So once it's in that final 15%, they can still raise prices because the supply is so limited. Like they said, the demand is at record levels. So there is still that lever that they can pull on, but it kind of remains to be seen. You know, maybe demand does change as we move through the year. If the economy does start to wobble a little bit more with the elevated prices as well. So there's still a lot of things that could, it's very dynamic, I think, still for them.
Yeah, I mean, the market is maybe concerned. I think they're down like 20% since the war broke out. So that's not necessarily great. What are you seeing from other consumer-facing companies and their ability to raise prices? Because you're starting to see it creep in. I mean, a government company, USPS, for example, is talking about a surcharge. According to a Wall Street Journal report, Delta, 20% increase too. Where are you seeing those price increases come in, and whether the consumer is able to handle them? Is it just like traveling, for example?
It's really tough right now. So if we think of just like the CPG companies, they've been so reluctant to raise prices now because they have done for so long. They're really focused on increasing volumes, right? But now with the costs coming up, you know, you're in a difficult position. The packaging costs are going to be rising, fuel costs are going to be rising, transportation costs are rising. So what do you do in that situation when you're so focused on improving your market share, improving your volume? So I think it will probably take us another earnings season before we start to get a really good sense of how companies are going to navigate this. Whether or not, you know, we can use Carnival as an example. They say that they're going to find $150 million of efficiencies, of operational efficiencies this year. So maybe they don't have to pass those prices on. But I don't know, you know, those can sometimes be a bit of a guess, right? It's an estimate for them. So it depends whether or not they're actually going to be able to achieve that goal and not pass the prices on.
Yeah, because we haven't had a complete rethink like we had in COVID or in tariffs of completely altering supply chains. Will be interesting to see if we get to a point where there is a reaction like that. Red, thank you so much for joining us. That's Bloomberg's Red Brown, as Carnival shares are slightly lower after a miss across the board. Coming up, a historic shift. Investors are pulling record amounts out of commodity ETFs, defying their safe haven role. That's next up on ETF Fridays. This is Bloomberg Open Interest.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
The world's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Welcome back to Bloomberg Open Interest. Let's get a check on your markets this morning. About 20 minutes into your trading day, still a negative session, still on track for a fifth consecutive weekly loss, being led by tech. It's a tough day. It's like all the fears come together. You have war, you have AI concerns weighing on the cybersecurity stocks, and still private credit. A concern, too, with Oaktree meeting all of their redemptions in one of their BDCs. So S&P falls 0.7, NASDAQ down almost 1%, now in a correction. Russell not doing well either because of what we're seeing in yields. Yields continue to creep higher, but this time it's not necessarily the front end, it's the long end that's leading it. In fact, we're rallying on the front end. We're down by 1.5 basis points, but we are pricing in now maybe longer-term uncertainty, maybe longer-term inflation as this conflict drags out, as President Trump says, not 5 days of a pause now it's 10 days to allow more room for negotiations. What does that do to the long-term uncertainty? 10-year yields at 4.45. What happens if we get to 4.5%? What breaks? NYMEX crude, that's up 3.2%. Brent crude not gaining as much. That's an interesting thing, too. Brent crude only up 0.7%. And great news, everybody. Gold is rallying. I mean, it's fallen quite a bit since this war broke out, but it's up 1.2%. The Gold Trust ETF also up 1.5%. There have been so many questions as to whether this is still a hedge, but we did see commodity ETFs. A record outflow as the Iran war rattles global markets. Roughly $11 billion has been pulled, with gold-focused funds taking the biggest hit. Let's get more insight now from James Seifert, ETF strategist analyst for Bloomberg Intelligence. James, I got to say, okay, maybe the gold ETF makes sense because there was so much momentum, the air comes out. But broader commodity ETFs, what gives as the price of energy moves higher?
Yeah, I mean, part of it is people were trying to, bet on it going up and they're taking profits. I think a lot of it has to do with the fact that you kind of saw this in major crisis, right? Like if you go back to 2008, the funds that bet on the housing crash, like they actually saw redemptions because people were going what has done well and taking their cash out. I mean, we've seen that all these things are not great hedges. As you just talked about, gold is down pretty hard right now. It's rallying slightly today, but over the last month, it hasn't been great. If you look at gold ETFs from the start of 2025 through the end of February, they had record inflows, 65 billion. But as you pointed out as well, 15 billion has come out so far in March. So I think a lot of it is, one, the hedges aren't working that great, whether it's bonds in general or gold. The only hedges that are really working are cash, and we see that with record money market assets, record money going into ultra-short bond funds like T-bills. But again, people are taking money, they're seeing gold go down a little bit, and they were like, it's already up, so why would I sell something that's down pretty hard when I can sell something that's up? And that's what I think contributed to what happened in March.
Yeah, we've seen some of that in the fund manager surveys from Bank of America, that cash has been really attractive to rotate into. The biggest rotation into cash, I think, since 2022. James, another area that people like to talk about is kind of a to hide out when there's geopolitical uncertainty is tech. That hasn't really been working out. I was just talking about the NASDAQ entering into a correction. What do tech ETF flows look like?
Yeah, so it's funny. To absolutely nobody's surprise, tech usually is the #1 sector for ETF flows. That is going to be upended for the first time since like early 2023, where energy has taken in the most money, or energy, specifically equity. Industrials is doing well, materials is doing well. Thematic ETFs that invest in things like infrastructure and natural resources, basically anything in the real economy, that's where most of the money is going. People are betting on, these supply chain disruptions and people actually having to build real things. But it's not like tech is seeing outflows. They're still seeing inflows. It's just that that's not where the money is necessarily going.
Right. I mean, maybe it's a good buy the dip. NASDAQ down 1.1% this morning. James, more broadly, there have been some reports about how retail investors haven't really been buying the dip this week for the first time. They sold NVIDIA for the first time since July on a net basis. Are you seeing any of that hesitation to dip buy starting to come through to the broader ETF universe as well?
Maybe a little, but there's nothing that's like jumping off the page. I mean, people are still trading these 2X products. They're still jumping into, yes, there's been recent outflows, some broad commodity stuff, but specifically broad commodity-based ETFs, there's people still allocating to them, diversifying. People are still betting on oil going up in many ways. It's just that you're never going to see these traders step away, but we're not seeing like massive, people trying to bet on what's happening from retail in the way that we were when this first started, a month ago.
All right, James, thank you very much. That's James Seifert from the Bloomberg Intelligence team. As stocks continue to fall, now falling on a report of a U.S. strike on a steel plant in Iran. We're looking at stocks down 0.9%. The Nasdaq falls 1.1%. We'll keep you up to date with any headlines as they come. You're watching Open Interest.
Nobu-san, would you say, when you look at your career, that the pivotal moment was actually that meeting with Robert De Niro? It took him 4 years to convince you to open a restaurant near him. You eventually did, and that started a partnership that has lasted through the decade.
You know, I met him 1988 after my first restaurant opened. He asked me to come to open the restaurant in New York. And beginning, I didn't know what he did.
You didn't know he was an actor?
No, I don't know what he doing because I never watched the movies. You know, I was traveling the business. But of course, after people, hey, Nobu, so you must know him, and then I understand.
How is he as a partner?
He's for me, and a great partner. He understands to my concept. He support me 100%. But he's a very smart people. Sometimes so strange idea, but it's good idea. So, example, Nobu Hotels idea come from him. He say, hey Nobu, so we have a lot of new restaurants coming in somebody's hotel. For him, doesn't make any sense. Then we start Nobu Hotel in Las Vegas 11 years ago. Now it's a big success. So next step is the residence.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
CBS News on the Hour, sponsored by JTV.com.
I'm Deborah Rodriguez. Lawmakers on Capitol Hill have made a move to end the crisis at airports. Correspondent Nicole Killian.
Just after 2 a.m. here on the East Coast, the Senate voted to unanimously fund most of the Department of Homeland Security. That includes TSA and other parts of DHS like FEMA and the Coast Guard. But funding for ICE and CBP or Customs and Border Protection is not included.
The House could vote as early as today before lawmakers break for the Easter Passover holidays. More airline passengers are donating to help TSA workers who've been on the job without getting paid. Ellen Dean dropped a gift card in a box at Birmingham Shuttlesworth Airport in Alabama.
I don't think it's fair at all. I think these people should be paid. They're the ones for our security, and to not be paid, I give the ones credit that are showing up.
So far, no comment from Iran after President Trump announced he was giving Tehran 10 more days to reopen the Strait of Hormuz in a new bid to bring the war to a close. Correspondent Chris Livesay reports from Dubai.
Publicly, the Iranians certainly are denying that they are, quote, begging to make a deal, as President Trump has characterized it. Instead, they're doubling down on their previous demands. They want the United States, of course, to cease hostilities. They also want to basically own the Strait of Hormuz.
Brent oil tops $110 again after two ships from China, an Iranian ally, were turned away from the strait today. Things will heat up across the South today. Meteorologist Craig Allen.
Dozens and dozens of record high temperatures are expected at least one more time in the east. So Augusta, Georgia, South Carolina, it would be Charleston, North Carolina may see a city like Charlotte getting into the mid to upper 80s to near 90 degrees.
There is a cold front moving east, and that's expected to have temperatures plunging tonight into tomorrow. A baseball star is suing his parents. CBS's Michael Wallace.
It is gone! Opposite field, home run, Alec Bohm!
The Philadelphia Phillies third baseman led his team to an opening day win Thursday, a day after he sued his parents for $3 million. Bohm claims they misappropriated his funds while managing limited liability companies on his behalf and misrepresented their stake in those LLCs. An attorney for the parents says they have always acted in their son's best interests and are saddened by the false narrative he is painting.
Savannah Guthrie is set to return to the Today Show. NBC says she'll be back a week from Monday, following a 2-month absence after her mother's kidnapping. The Dow is down 495. This is CBS News. As March Madness revs up, a court rules on that pervasive two-word term, and others like it.
A federal judge has denied the NCAA's motion for a temporary restraining order to stop DraftKings from using registered trademarks associated with the men's and women's basketball tournaments. The NCAA requested DraftKings stop using March Madness, Final Four, Elite Eight, and Sweet 16 and variations of those terms to promote its business. The judge indicated it was not demonstrated how the online sports wagering platform's use of those terms would cause irreparable harm. Steve Kathan, CBS News.
Love was in the air at the iHeartRadio Awards when Taylor Swift picked up one of her 7 prizes.
This album probably also feels very happy and confident and free because that's the way that I get to feel every single day of my life because of my fiance, who's here.
Deborah Rodriguez.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, originals and the Bloomberg Business app.
Good Friday morning from the Bloomberg Interactive Broker Studio in New York City. We are streaming live on YouTube. We are streaming live on Bloomberg.com as well. Coming up, we're going to check in with Joanne Shu. University of Michigan surveys. The UMich survey came out today. The headline a little bit weaker than expected. We'll break that down coming up with Joanne. Nancy Daoud, a private wealth advisor at Ameriprise Financial, will join us, give us her thoughts on these markets going forward. And then Brendan Murray, Bloomberg News global trade editor, Talk to us about U.S.-China global trade. We got a summit coming up, and how's the trade situation look? Wendy Schiller will give us the latest on what's happening in Iran, U.S.-Israel. She's at the Brown University as well. Randall Williams, Bloomberg Business.
Slow city lights, slow city lights, slow city lights, slow feels so right. 어제의 시간 멀어지고 slow city lights, I feel alive. 늦은 밤 거리 조용한 리듬 불빛 사이로 흐르는 feeling 사람들 속에 스치는 순간 어쩐지 오늘 가벼운 마음 멈췄던 시간 천천히 움직여 이 밤이 나를 데려가 Slow city lights shining tonight Slow city lights feel so right 흐르는 이 밤 다가가는 Slow city lights hold me tight 바람이 지나 머리를 스쳐 작은 멜로디 거리로 번져 익숙한 골목 낯선 이야기 오늘의 나는 조금 달라 조용한 heartbeat 리듬을 타고 이 밤이 나를 부른다 Slow city light shining tonight Slow city lights feel so right 흘러가는 밤 그 사이로 Slow city lights stay tonight 잠들지 않는 도시의 숨 그 안에서 나는 걸어 조금 느리게 하지만 free Slow city lights Slow city lights Slow city lights Slow feel so right 어제의 시간 멀어지고 Slow city lights I feel alive 늦은 밤 거리 조용한 리듬 불빛 사이로 흐르는 feeling 사람들 속에 스치는 순간 어쩐지 오늘 가벼운 멈췄던 시간 천천히 움직여 이 밤이 나를 데려가 Slow city lights shining tonight Slow city lights feel so right 흐르는 이 밤 다가가는 Slow city lights hold me tight 바람이 지나 머리를 스쳐 작은 멜로디 거리로 번져 익숙한 골목 낯선 이야기 오늘의 나는 조금 달라 조용한 heartbeat 리듬을 타고 이 밤이 나를 부른다 Slow city light shining tonight Slow city lights feel so right 흘러가는 밤 그 사이로 Slow city lights stay tonight 잠들지 않는 도시의 숨 그 안에서 나는 걸어 조금 느리게 하지만 free Slow city lights Slow city lights Slow city lights Slow feel so right 어제의 시간 멀어지고 Slow city lights I feel alive 늦은 밤 거리 조용한 리듬 불빛 사이로 흐르는 feeling 사람들 속에 스치는 순간 어쩐지 오늘 가벼운 마음 멈췄던 시간 천천히 움직여 이 밤이 나를 데려가 Slow city lights shining tonight Slow city lights feel so right 흐르는 이 밤 다가가는 Slow city lights hold me tight 바람이 지나 머리를 스쳐 작은 멜로디 거리로 번져 익숙한 골목 낯선 이야기 오늘의 나는 조금 달라 조용한 heartbeat 리듬을 타고 이 밤이 나를 부른다 Slow city light shining tonight Slow city lights feel so right 흘러가는 밤 그 사이로 Slow city lights stay tonight 잠들지 않는 도시의 숨 그 안에서 나는 걸어 조금 느리게 하지만 free Slow city lights Slow city lights Slow city lights Slow feel so 늦은 밤 거리 조용한 리듬 불빛 사이로 흐르는 feeling 사람들 속에 스치는 순간 어쩐지 오늘 가벼운 마음 멈췄던 시간 천천히 움직여 이 밤이 나를 데려가 Slow city lights shining tonight Slow city lights feel so right 흐르는 이 밤 다가가는 Slow city lights hold me tight through this heart of mine
Not just a song,
not just a song
a place that never settled down. I rang my home across the night, across the time. I am not alone. I rang, still it calls my name. A voice that left a century still burns a quiet flame. Still remains.
In a distant room, cold winter light, 7 shadows out of sight, a fragile voice, the air was thin, but time began to breathe within.
No name to hold, no place to stay. Only a song that would not fade.
No road, no home, no way to turn. Only a voice we never learned.
Harry rang my home. Across the night, across the time, I am not alone. Harry rang, calling through the wind.
A voice that crossed 100 years
now lives in me again. Through the wires and through the dust, through forgotten, broken trust, a sound remains where words are gone. A quiet truth still holding on.
I hear it where the silence stays between the dark and yesterday.
No map, no sign, no place to be, only a song inside of me. Harry rang my home. Across the night, across the time, I am not alone. Harry rang, calling through the wind. A voice that crossed 100 years now lives in me again. If I was there, would I have known the weight inside that fragile tone.
A single breath, a trembling line, still moving through this heart of mine.
Not just a song,
not just a sound,
a place that never settled down. I re-rang my home. Across the night, across the time, I am not alone. I re-rang, still it calls my name. A voice that left a century still burns a quiet flame. Still remains.
In a distant room, cold winter light, 7 shadows out of sight, a fragile voice, the air was thin, but time began to breathe within.
No name to hold, no place to stay, only a song.
머리를 스쳐 작은 멜로디 거리로 번져 익숙한 골목 낯선 이야기 오늘의 나는 조금 달라 조용한 heartbeat 리듬을 타고 이 밤이 나를 부른다 Slow city light shining tonight Slow city lights feel so right 흘러가는 밤 그 사이로 Slow city lights stay tonight 잠들지 않는 도시의 숨 그 안에서 나는 걸어 조금 느리게 하지만 free Slow city lights Slow city nights Slow city lights feel so right 어제의 시간 멀어지고 Slow city lights I feel 늦은 밤 거리 조용한 리듬 불빛 사이로 흐르는 feeling 사람들 속에 스치는 순간 어쩐지 오늘 가벼운 마음 멈췄던 시간 천천히 움직여 이 밤이 나를 데려가 Slow
곳에도 너의 흔적이 있어 사소한 표정 하나에 모든 게 흔들려 아무 일 아닌 척 웃어 보이지만 내 안의 균형은 조용히 무너져 지우면 변할까 아니면 더 아플까 스스로 묻지만 답은 없어 밀어내도 되돌아오는 이름 놓아도 손에 남는 체온 벗어나면 나는 나일까 아니면 이미 너로 채워진 걸까 나는 너를 향해 기울어진 하루 속에 돌아서려 해도 멈출 수 없어 지워지지 않는 이 낯선 중력에 나는 또다시 붙잡혀 멀어질수록 더 가까워지는 이 감정의 한가운데 네가 스친 공기마다 온도가 달라져 평범했던 하루가 조금씩 기울어 말하지 않은 사이에도 모든 게 달라져 보이지 않는 힘이 나를 붙들어 한 발 물러서려 해도 발끝이 멈춰서 지워내려 할수록 더 선명해져 나는 너를 향해 기울어진 하루 속에 멀어지려 할수록 가까워져 멈추고 싶은데 이미 늦어버린 걸 이 마음이 나를 끌어당겨 빛이 닿지 않는 곳에도 너의 흔적이 있어 사소한 표정 하나에 모든 게 흔들려 아무 일 아닌 척 웃어 보이지만 내 안의 균형은 조용히 무너져 지우면 변할까 아니면 더 아플까 스스로 묻지만 답은 없어 밀어내도 되돌아오는 이름 놓아도 손에 남는 체온 벗어나면 나는 나일까 아니면 이미 너로 채워진 걸까 나는 너를 향해 기울어진 하루 속에 돌아서려 해도 멈출 수 없어 지워지지 않는 이 낯선 중력에 나는 또다시
내가 스친 공기마다 온도가 달라져 평범했던 하루가 조금씩 기울어 말하지 않은 사이에도 모든 게 달라져 보이지 않는 힘이 나를 붙들어 한 발 물러서려 해도 발끝이 멈춰서 지워내려 할수록 더 선명해져 나는 너를 향해 기울어진 하루 속에 멀어지려 할수록 가까워져 멈추고 싶은데 이미 늦어버린 걸 이 마음이 나를 끌어당겨 빛이 닿지 않는 곳에도 너의 흔적이 있어 사소한 표정 하나에 모든 게 흔들려 아무 일 아닌 척 웃어 보이지만 내 안의 균형은 조용히 무너져 지우면 변할까 아니
마음 깊은 곳에 그대를 두고 아무 말도 못한 채 하루를 넘겼죠 창가에 기대어 한참을 서 있다 지워지지 않는 이름을 조용히 불러요 돌아서면 괜찮을 줄 알았는데 그게 아니었나 봐요 그 자리에 남아 움직이지 않는 마음 시간이 지나도 여전히 그대로죠 말하지 못했던 그 한마디처럼 마음 깊은 곳에 그대로를 두고 어쩌면 우리는 처음부터 알았죠 서로 다른 길 위에 서 있었다는 걸 손을 놓던 순간 아무 말도 없이 돌아보지 못한 채 걸어 나왔죠 밤이 길어질수록 더 또렷해지는 기억 지우려 할수록 더 깊어지는 마음 그 자리에 남아 흔들리지 않는 마음 다른 계절이 와도 여전히 그대로죠 부르지 못했던 그 한 사람처럼 마음 깊은 곳에 그대로를 두고 그대로 두고 있어요 마음 깊은 곳에 그대를 두고 아무 말도 못한 채 하루를 넘겼죠. 창가에 기대어 한참을 서 있다 지워지지 않는 이름을 조용히 불러요. 돌아서면 괜찮을 줄 알았는데 그게 아니었나 봐요. 그 자리에 남아 움직이지 않는 마음 시간이 지나도 여전히 그대로죠. 말하지 못했던 그 한마디처럼 마음 깊은 곳에 그대로를 두고 어쩌면 우리는 처음부터 알았죠. 서로 다른 길 위에 서 있었다는 걸. 손을 놓던 순간 아무 말도 없이 돌아보지 못한 채 걸어 나왔죠. 밤이 길어질수록 더 또렷해지는 작은 멜로디 거리로 번져 익숙한 골목 낯선 이야기 오늘의 나는 조금 달라 조용한 heartbeat 리듬을 타고 이 밤이 나를 부른다. Slow city light shining tonight. Slow city lights feel so right. 흘러가는 밤 그 사이로 slow city lights stay tonight. 잠들지 않는 도시의 숨 그 안에서 나는 걸어 조금 느리게 하지만 free. Slow city lights, slow city nights, slow city lights, slow feel so right. 어제의 시간 멀어지고 slow city lights, I feel alive. 늦은 밤 거리 조용한 리듬 불빛 사이로 흐르는 feeling 사람들 속에 스치는 순간 어쩐지 오늘 가벼운 마음 멈췄던 시간 천천히 움직여 이 밤이 나를 데려가. Slow city lights shining tonight. Slow city lights feel so right. 흐르는 이 밤 다가가는 slow city lights hold me tight. 바람이 지나 머리를 스쳐 작은 멜로디 거리로 번져 익숙한 골목 낯선 이야기 오늘의 나는 조금 달라 조용한 heartbeat 리듬을 타고 이 밤이 나를 부른다. Slow city light shining tonight. Slow city lights, slow city nights, slow city lights, slow feels so right. 어제의 시간 멀어지고 slow city lights, I feel alive. 늦은 밤 거리 조용한 리듬 불빛 사이로 흐르는 feeling 사람들 속에 스치는 순간 어쩐지 오늘 가벼운 마음 멈췄던 시간 천천히 움직여 이 밤이 나를 데려가 Slow city lights shining tonight Slow city lights feel so right 흐르는 이 밤 다가가는 Slow city lights hold me tight 바람이 지나 머리를 스쳐 작은 멜로디 거리로 번져 익숙한 골목 낯선 이야기 오늘의 나는 조금 달라 조용한 heartbeat 리듬을 타고 이 밤이 나를 부른다 Slow city light shining tonight Slow city lights feel so right 흘러가는 밤 그 사이로 Slow city lights stay tonight 잠들지 않는 도시의 숨 그 안에서 나는 걸어 조금 느리게 하지만 free Slow city lights Slow city nights Slow city lights Slow feel so right 어제의 시간 멀어지고 Slow city lights I feel alive 늦은 밤 거리 조용한 리듬 불빛 사이로 흐르는 feeling 사람들 속에 스치는 순간 어쩐지 오늘 가벼운 마음 멈췄던 시간 천천히 움직여 이 밤
내가 스친 공기마다 온도가 달라져 평범했던 하루가 조금씩 기울어 말하지 않은 사이에도 모든 게 달라져 보이지 않는 힘이 나를 붙들어 한 발 물러서려 해도 발끝이 멈춰서 지워내려 할수록 더 선명해져 나는 너를 향해 기울어진 하루 속에 멀어지려 할수록 가까워져 멈추고 싶은데 이미 늦어버린 걸 이 마음이 나를 끌어당겨 빛이 닿지 않는 곳에도 너의 흔적이 있어 사소한 표정 하나에 모든 게 흔들려 아무 일 아닌 척 웃어 보이지만 내 안의 균형은 조용히 무너져 지우면 변할까 아니면 더 아플까 스스로 묻지만 답은 없어 밀어내도 되돌아오는 이름 놓아도 손에 남는 체온 벗어나면 나는 나일까 아니면 이미 너로 채워진 걸까 나는 너를 향해 기울어진 하루 속에 돌아서려 해도 멈출 수 없어 지워지지 않는 이 낯선 중력에 나는 또다시 붙잡혀 멀어진
You know, if consumers are paying a lot more money for gasoline in May and June, and even through July 4th, our 250th anniversary, that will not go away. That kind of pinch will still, voters will remember that. Oh, my summer vacation cost me a couple of $100 more. So I think it's got to end before Memorial Day in terms of the reverb on the economy.
What is the support level, I guess, within Congress for the president and this war? We know that his approval ratings are low, but boy, the military's had some tremendous successes so far.
Well, certainly, I think that President Trump can make an argument that he has done more damage to the political infrastructure and even the nuclear capacity of Iran than his predecessors Biden or Obama did. I think he can walk away with a victory on that now. But, you know, decapitating that leadership, really regime change is not going to happen without ground troops and hundreds of thousands of ground troops. That's not something they've finally realized now. I think shortly after they started this thing, you can't do it without ground troops. And I think that's an area Trump does not want to go. So I think that the members of Congress have said they support the president. Iran's an enemy. Iran's the largest sponsor of world terrorism that we know of. But they have said they have strong concerns about any plan for massive ground troops. And I think they're sticking with that. And they're hearing from their Republican voters in their districts, do not do this. We do not support this. Even MAGA is split nationally. You know, some very loud voices in MAGA are saying, we didn't sign up for this. It's not what you promised us. We don't want any part of it. And also looking like he's pressured from Israel is also a liability in MAGA. In ways, the Democratic has its own liability. Democrat Party with Israel, but the Republicans have a liability with Israel and the Iran war as well. So I think we're getting a lot more loud discontent that could absolutely reverb on the Republicans with people staying home in 2026.
It's kind of hard to understand what victory looks like because the public didn't really get a full explanation of what the war was meant to achieve. So is it a victory for the president, for Republicans? Is it mission accomplished if there is no regime change in Iran, if there is no seizure of Iranian uranium?
Well, that's absolutely the point about the messaging around this war. Unfortunately for the Trump administration, their messaging was mixed. You know, you can't have that and then claim a clean victory. The messaging was we were supporting our ally Israel, or the messaging was Iran poses a direct threat to the United States. And those people who are old enough to remember the Iraq War under George W. Bush, when that same messaging came out, and we later learned after 15 years of war that they weren't really a direct threat to us. That is the big fear, I think, amongst a lot of members of Congress, Republicans who remember that as well. So is it a threat or not? We can certainly say that the terrorism that's been funded by Iran has threatened not only Israelis, but people all over the world, in France, all sorts of terrorist attacks, Africa, America, that there is a threat and that it's a continuous threat. And that has to be visibly stopped. And then in terms of nuclear progression, that's going to depend on access. Can we get in to verify how far we have set them back? And that will be a condition of any cessation of hostilities that I think the Trump administration would insist on.
30 seconds left. Wendy, what do you think the strategy for the Democrats should be leading up to the midterms?
Democrats also face the problem with simplifying their message. It has to still be affordability. It has to be gas prices. It has to be housing. And it has to be health care, because that's when they win elections. Those messages win them elections. When they get into international relations, as we saw in 2024, it gets very divisive and very, very difficult for them. So they have to critique this, but they have to really always come back to how it's affecting the daily lives of Americans.
All right, Wendy, thank you so much. Appreciate that. As always, Wendy Schiller, professor at Brown University, joining us via Zoom from Providence.
The reason you're increasing the cost of the product that you're delivering to them is because of fuel. I think fuel
Not your
surcharges
fault, in other
always
words.
yeah, exactly. So FedEx goes, hey, look, sorry about it. You know, the world economic environment is such that I'm going to have to charge you more because fuel prices are higher. Look, I think at airlines are a very competitive business. And so airlines see a lot of movement up and down in ticket prices. And so I think because of that competitiveness, yes, you could see where they would rise here. And then, you know, as soon as you start to get decreases in the price of fuel, we typically see some of the airlines that want to take market share, they'll lower fares, they'll add to the airplane, you know, add people to the airplane, and then the game starts over again, right? We start moving the wrong direction in fares if you're a shareholder.
George, what are the airlines doing in terms of capacity? Are they adding capacity to the system? Are they taking it down? What are they doing?
Yeah, so we're not seeing much yet. My colleague Francois Duflo put out a report this week. It's on our AIRLN dashboard. We haven't seen much movement. And my guess is that the airlines are probably waiting to see if this war could end quickly. If it ends quickly, you know, maybe they don't have to take any capacity out for summer season. Summer's their peak season. They've probably sold a lot of it already. But I think if these higher fuel prices persist, I think you'll see as you get through summer, they'll have to start to cut capacity to keep fares higher. And that becomes part of the risk as well for the companies like JetBlue, Spirit, Frontier that you know, cater to the lower the lower tier of the traveling public. The challenge is their customers are probably going to be, their budgets will be stretched a little bit more. And I think, if you're United and you're American, especially United and Delta, and you've got a fair amount of premium travelers flying on your airplanes, they're not going to really be bothered, right, by a 20 or 30% increase in their fare price. They're going to keep flying, and those airlines are going to continue to subsidize the back of the airplane, that discount traveler, and it's going to make it harder to fill airplanes, I think, at the low-cost carriers here for a bit. So we'll see how it all
I don't think
develops.
they'll like the 20% increase in fares. They'll keep flying, though, because, they have places to go. George, thank you so much. George Ferguson is our senior aerospace defense and airlines analyst on the latest in the world of aviation. This is Bloomberg Intelligence. We're looking at declines in equities on this Friday, with the S&P lower by almost 1%, the NASDAQ off by 1.4%, and yields at the short end moving down. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks in the red. We've got the NASDAQ 100 index in correction territory. This Bloomberg Business Flash brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. Get a free gold and silver info guide. Learn how to add metals to your IRA or 401k tax and penalty free. Go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. S&P 500 index down 59 now, drop there of 0.9%. The Dow down 404. Right now, down 0.9%. S&P on track for another losing week. We are looking for a fifth weekly decline on the S&P. NASDAQ is down 1.3% now. The NASDAQ 100 index, as I mentioned, in correction territory, down 1.2%. The VIX just above 29 now with a 10-year 4.42%. The 2-year 3.92%. Gold up 3.8%, 45.43 the ounce. Brent right now at 110.80. That's a gain of 2.6%. West Texas Intermediate crude right around 98 a barrel, up 3.7%. Meta Platforms is paying for the construction of 7 new natural gas-fired plants to fuel its most power-hungry data centers, increasing its reliance on fossil fuels amid a fast-moving artificial intelligence race. The company has reached a new agreement with Entergy. Meta Platform shares today. Right now we do have Meta trading down by 3.6%. Energy is surging 7.1%. Recapping, stocks lower, correction territory for the NASDAQ 100 index, S&P down 0.9%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Now on Bloomberg Intelligence, Munis in Focus.
All right, today's Focus on Munis is brought to you by BAM Mutual. Put America's strength to work in your portfolio with BAM insured municipal bonds. Protect your investments with an added layer of security and guaranteed income. Invest with strength. Build a stronger tomorrow with BAM Mutual. This is the time of the week. It's Friday. We talk municipal bonds. Today we do that with Elizabeth Rembert, municipal finance reporter for Bloomberg News, joining us here in studio. Elizabeth, I noted that you are a University of Nebraska graduate, right?
Yes.
Okay. Tough night last night for you guys, right?
Devastating. And all Nebraskan fans know we would have rather lost to any other team.
Than Iowa. So talk to us about that rivalry, because we don't really get that here in the East.
Mm-hmm.
Big rivalry, Nebraska-Iowa.
It really is. We're both in the Big Ten. We are neighbors.
Yep.
We play each other in football on every Friday after Thanksgiving. It's pretty intense. There's a rivalry over who has better corn, and the answer is Nebraska, of course.
Nebraska corn. That's awesome, fighting over quality of corn. All right, in the world of municipal finance here, I see